The Wolves of Investing stock of the month for December 2020 is Realty Income Corporation. The ticker symbol is O. Realty Income is a real estate investment trust, or REIT, that's known for paying out monthly dividends. In this video, I'm going to give a high-level overview of Realty Income Corporation. Then I'm going to give you my bull case for Realty Income and my long-term investment strategy in O stock. All this right after. I am not a financial advisor. This video is for entertainment purposes only. Learn to invest like a wolf at your own risk. What's up, everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen and I'm the founder of Wolves of Investing. If you're new, my channel is primarily about investing in the stock market. If you want to learn how to achieve financial freedom through investing, be sure to click on that subscribe button and notification bell if you haven't yet. Every month, I pick a stock that I believe has a good chance of beating the S&P 500 over the next 5 to 10 years. And today, that stock is Realty Income Corporation. All of my previous stock of the month picks and performance against the S&P 500 can be found on wolvesofinvesting.com. I'll leave a link in the video description. And I'd like to give a quick shout out to my friend Citizen of the Year, who also runs a stock investing channel on YouTube. I first heard about O stock from his channel, so I definitely recommend you guys check out his channel. And before we get into it, please remember to drop a like on this video if you enjoy it, as it truly helps out the channel. All right, so let's get right into it. Realty Income Corporation was founded in 1969 to provide investors with monthly dividends that increase over time. It's been publicly traded on the New York Stock Exchange since 1994 with the ticker symbol O. They are so committed to that monthly dividend that they even call themselves Realty Income, the monthly dividend company. They've had 604 consecutive monthly dividends paid since 1969, 109 dividend increases, 93 consecutive quarterly increases, dividend growth of 212.7%, and a compound average annual dividend growth rate of approximately 4.5%. They have an entire page on their website dedicated to their monthly dividend commitment. And they just became a dividend aristocrat this year. Dividend aristocrats are companies that have increased their dividends every year for at least 25 years. They own over 6,500 properties diversified with approximately 600 different tenants, operating in 51 industries located throughout 49 states, Puerto Rico, and the United Kingdom. The properties are generally freestanding buildings in prime locations with good access and visibility. Most of their leases are structured as triple net leases, which means that besides paying rent every month, the tenant is responsible for the property's operating expenses, such as taxes, maintenance, and insurance. They have a very well diversified real estate portfolio, and here's a list of its largest 20 tenants. This list represents 52.6% of its annualized contractual rental revenue. At the top of the list, we have Walgreens at 5.8%. Then we have 7-Eleven at 4.9%. And if we continue down the list, we have Dollar General, FedEx, Dollar Tree, LA Fitness, Regal Cinemas, AMC Theaters, Sainsbury's, Walmart and Sam's Club, Lifetime Fitness, Circle K, BJ's Wholesale Clubs, Treasury Wine Estates, CVS Pharmacy, Super America, Kroger, Home Depot, GPM Investments, and TBC Corp. So by investing in Realty Income Corporation, we're actually indirectly investing in all these other companies. Realty Income also has a very good industry diversification, as you can see from this table, and geographic diversification across the United States and in the UK. And here's a snapshot of their property type composition. Their latest portfolio occupancy rate was 98.6%, even in this 2020 global health crisis. And the year-end occupancy rate has never been below 96%. That even includes the Great Recession that stemmed from the housing crisis. As you can imagine, with this health crisis we're in, they've had trouble collecting rent from movie theaters, gyms, and restaurants. Even so, because of their industry diversification, the theater industry represented only 5.7% of their annualized contractual rental revenue. So they still managed to collect 93.1% of contractual rent, as reported in their latest quarterly earnings report. And year to date, they've invested approximately $1.3 billion in additional real estate assets. So they're continuing to grow their business even in these tough times. Okay, so that was my high-level overview of Realty Income Corporation. So what is my bull thesis for O stock? At its Monday night closing price of $60.62, Realty Income has an annual dividend yield of 4.65%. Given their consistent track record over the last 51 years, we can reasonably expect that they'll be doing just fine when the reopening starts. It's still trading for 28.6% lower than its all-time high of $84.92, set in February of this year. I expect the stock price to be at all-time highs again in the next couple of years. And once it gets there, I don't think we'll ever see it below $65 again. If we look at the 26-year stock chart of Realty Income, we can see that the best time to buy O stock was when it had these huge dips, like right here in the early 2000s, or right here in the Great Recession, and potentially right here in December of 2020. Now, we don't know where the stock is going to go from here. It could go down, or it could go sideways, or it could go upward. With the vaccine coming out, I think it's more likely to go upward. And full disclosure, I do own O stock. As long as my bull thesis stays intact, I don't plan on selling a single share until it at least doubles. My cost basis is approximately $60 to $61 per share. I'm willing to dollar cost average all the way up to $65 per share. And I'm willing to invest up to 10% of my investment capital. If you've been following me for a while, you know that I don't invest more than 10% of my investment capital into any individual stock in order to mitigate my risk of going broke. I only own Realty Income in my tax-advantaged accounts, such as my Roth IRA. And I think that's the best way to go, since the dividends get paid out tax-free. Another benefit of having it in my Roth IRA is that the dividends are a backdoor way to add more cash to my Roth IRA above my $6,000 annual contribution limit. At some point in time, I do expect O stock to double from my buy price. It may take 5 years, or it may take 10 years. I don't think it's a matter of if, it's more of a matter of when. As its 26-year stock chart has shown us, it consistently reaches new highs after a bear market and at least doubles. I do believe that Realty Income is a cyclical stock, so when my stock price has more than doubled, I plan to sell half of my shares. That way I take all of my principal out of the stock and continue to collect monthly dividends on the house's money. And I do believe that this cycle will continue approximately every 10 years. And if it does, I plan to continue this cyclical investment strategy every 10 years and build up really solid tax-free monthly dividends from my O stock. So tell me what you think about Realty Income Corporation. Drop me a line in the comments. Be sure to leave a like on this video before leaving. Thanks for watching, and I'll see you next time.